This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Stocks and treasuries level off after a slide triggered by hawkish comments from Fed Chair Jerome Powell. He's signalling that the wait for a rate cut could get longer. The US prepares to impose new sanctions on Iran targeting its missile and drone program. That after the weekend attack on Israel. Plus, we hear from the Finance Minister of Zambia as it tries to conclude debt restructuring talks. Well, it's just gone 8 a.m. across the Emirates, 5 a.m. here in London. I'm Lizzie Burden. Good morning, and I hope you're not too wet if you're in the United Arab Emirates. It's a wonder that the weather's worse there than it is here in London, but we'll get to the weather in a moment. To the markets first. Of course, we did have the hawkish Jay Powell speaking yesterday, acknowledging those 3 hot inflation prints over in the US and the risk that actually it's going to make it harder to get inflation back to the 2% target. So that knocked stocks yesterday. The Asia session actually eking out gains at the moment, and if we look to futures, they're pointing to a higher opening this morning now. But if we flip over to the cross-asset picture, you can see the impact on treasuries. Yields trading in a narrow range. They did climb to fresh 2024 highs yesterday. The market now pricing in 25 to 50 basis point reductions in the Fed rate this year, starting in either July or September. But the dollar edging lower now. It's been on an absolute tear, it has to be said, with the best 5-day gain since October 2022 yesterday. But away from central banks, we've got Brent there, $89.51 a barrel currently, as traders monitor the geopolitics in the Middle East, which we will dig into. But traders really awaiting Israel's response to Iran's attack over the weekend. And finally, I've just stuck on Bitcoin. 63,847 is where we trade currently. We're going to discuss the imminent Bitcoin halving later in the programme with the CEO of Grayscale, Michael Sonnenschein. Usually that halving, of course, is a tailwind for prices, but does he reckon we've seen the best of the Bitcoin rally this year? We'll ask him later this hour. But first, let's get to Asia markets. We've got Avril Hong standing by for us in Singapore. Avril, what's happening where you are?
Well, Lizzie, we're looking at Asia currencies and how they're getting a bit of a reprieve thanks to the dollar rally stalling. And in many ways, Powell came in hawkish, but he also more or less confirmed what that red-hot US CPI print from last Wednesday prompted among traders, that we're going to see a delay in rate cuts. So we're seeing a bit of reprieve for the Korean won, the yen. We're looking at 160 potentially for dollar yen by some traders. The Chinese currency is also in focus after its PBOC set the yuan fix above 710 for another session. Now let's flip the board because I wanted to show you what we're seeing on the Korean won as well as the Japanese yen. Amid the recent weakness, they're still, despite the climb today, hovering at multi-year lows, and that's drawn actually these comments from South Korean and Japanese officials, jawboning that's helped to stem the bleed. That being said, though, we are still watching out for Asia currencies given the higher demand for the dollar. It's not just about the yields, it's also about the geopolitics of it all. Lizzie.
All right. Thank you, Avril Hong in Singapore. And let's get into that geopolitics now, because the US says that it will impose new sanctions on Iran targeting the country's missile and drone program. That, of course, follows its weekend attack on Israel. White House National Security Advisor Jake Sullivan says sanctions could be unveiled in the coming days. And the US is coordinating with G7 nations and allies on what it calls a comprehensive response. For more, let's bring in Bloomberg's Stuart Livingston-Wallace. Stuart, the US and the EU and maybe others are pushing for these new sanctions on Iran. What more do we know?
I mean, really, it's trying to, I think, achieve 2 things here. Number one is that it's a direct punishment on Iran. In other words, try and reinstitute some sort of deterrence. So it's going to hurt it economically and in terms of its missile development and so on. But I think the much more important point to make here, and the reason it's happening now, is that they're trying to signal very strongly to Israel that the international community will act together. There will be some sort of diplomatic coordination here to punish Iran and to contain Iran. In other words, to provide some sort of signal to Israel that it doesn't necessarily need to escalate the current conflict. So we're sort of looking at the various options that might be out there, but fundamentally the international community, the priority here is to de-escalate, not escalate the situation in the Middle East.
So that's the international pressure. What about the domestic pressure? We know that Israel's War Cabinet postponed its meeting that was scheduled. What should we read into that?
Well, we don't know exactly why it happened. I mean, you could interpret that as sort of Israel watching and waiting to see what exactly the international community is proposing and whether that satisfies its concerns about whether the attack that we saw overnight on Saturday into Sunday could potentially happen again. So I think they're looking for reassurances. But in terms of the options on the table to them, there's a whole range of things out there. And that starts with direct attacks on nuclear facilities within Iran, so either the research centers or the development centers. Now, that's going to be quite difficult because many of them are buried very deep in Israel, alone without US help, probably couldn't take those out. Or it's a mass attack on the proxies, which we've sort of seen the playbook for that, or it's a cyber attack, or it's assassinations, or whatever it happens to be. So there are lots of options out there, and Israel, really, the calculation it's trying to make is, does that escalate things? Can Israel live with that? And more importantly, to what extent does that distract it from its main campaign, which is obviously against the Hamas leadership in Gaza?
Indeed, and we've got a fantastic read on the terminal about Israel's options to retaliate against Iran. Highly recommend giving it a read. Bloomberg's Stuart Livingston-Wallace, thank you for that update on the geopolitics, which of course is feeding into the oil price. You've got Brent trading just under $90 a barrel, weaker this morning as traders await the response there. But let's get back to central banks. We've had hawkish comments by the Fed Chair Jerome Powell hitting market sentiment. He signalled that the wait for a rate cut could get longer.
We'll need greater confidence that inflation is moving sustainably toward 2%. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us. The performance of the U.S. economy over the past year has really been quite strong. Come what may, we remain strongly committed to returning inflation over time sustainably to 2%.
So, Jerome Powell changing his tune a bit there. Let's bring in for analysis Aisha Tariq, who's Macrovisor co-founder. Aisha, lovely to have you with me. As I say, Jay Powell changing his tune a bit there. Are you thinking, after these three hot US CPI prints, maybe we've got a real policy error here?
Good morning, Lizzie. So, yes, I think so. And this is something that we've been discussing for a while now, that if they started cutting too soon and too drastically, that would sort of, put them into a policy error here, because we've been seeing inflation. So since December, in fact, when Jay Powell came out and he was very dovish, we've been seeing things start to, pick up. We've seen animal spirits come back into the market. We've seen the market surge. We've seen commodity prices start to increase, not just for the, easing of financial conditions, but also because of global weather patterns and manufacturing coming back. So everything considered, yes, we've been seeing inflation gradually start to pick up. And our notion was that they would start cutting in July. We may have to push back that a little bit to September now, because and it's a good thing, because at least they're acknowledging that inflation is still a problem.
And indeed, the market reflects that repricing. I wonder whether you think that maybe the Fed's going to botch the landing now.
That's something that we were thinking about. And again, if they had cut too soon, we were thinking that inflation may come back in a big way, and that would mean that they were so close, but, finally they botched the landing. There's still room for that, because the Fed is famous for making policy errors. But this time around, it would seem that they're being a little bit more level-headed. And if they are acknowledging inflation here, if they are going to wait for a while, I think we might see them actually land quite okay.
And when it comes to stocks, obviously, Aisha, it puts a lot of pressure on earnings season to deliver. You've got the Magnificent Seven pretty much priced to perfection. Can it deliver?
Lizzie, I don't know. But we would hope so, because if they don't deliver, we're looking for a lot of pressure on the market. So right now we have yields that are above 4.5%. That was kind of a threshold that we and other traders were watching. And you can see what's been happening as soon as, yields started crossing 4.5%, right? I mean, the market started to go down. We've been down now, I think, for 3-4 days in a row. Add to that the geopolitical tensions. So everything considered, I don't think we are in a very good position right now. And so if the Max 7 doesn't deliver, and I want to say not the Max 7, in fact, just maybe the Max 4 even, if they don't deliver, we are likely to see further pressure on the market.
I love the honesty. Aisha, you mentioned the geopolitics. Let's talk oil. Do you see it hitting $100 a barrel? And if so, how much would that impact margins?
So we're in a very interesting situation right now. As you saw, nothing really happened to oil even after Iran attacked, right? And part of the reason for that is because everybody knows that Iran cannot actually block the Strait of Hormuz. It's not in their best interest to do that. They need the access port. But at the same time, I think, the threat of disruption is enough to push it above $100 a barrel if the threat is real enough. I'm not saying that, we're going to stop oil flows through the Strait of Hormuz or through this area. But at the same time, market sentiment is what moves prices, right? And so that could sort of put upward pressure on prices for a little bit. Now, in terms of margins, obviously that's going to weigh on margins. That's going to weigh on the dollar. So our biggest threat here, I think, from everything that we're seeing, whether Fed policy, whether geopolitical tensions, is a higher dollar. A higher dollar obviously puts pressure on emerging market currencies, which brings back inflation in those countries as well. So everything considered, what we're watching is the dollar, I think. And, we want to see the dollar remain stable. And becoming too strong here would actually cause havoc across the world.
OK, so the strong dollar putting pressure on emerging market currencies elsewhere. Just before I let you go, Aisha, which sectors are you liking?
So with inflation coming back, we do like the reflation trade. We've been talking about that for a while. Energy is an obvious choice. We've talked about that, I think, for 2-3 months now. But there's also the EPS upward revision here in the sector. So we like energy, we like materials, we like mining. These are good sectors to be long for the time being.
OK, Aisha Tariq, Macrovisor co-founder. Lovely to have you with me this morning. An impressive bookcase, I must say, behind you.
Thank you, Lindsay.
Now, let's get to that weather update in Dubai, our favourite topic here in London. Dubai has seen torrential rains and heavy flooding, and it's prompted flight cancellations, it's prompted school closures, you've seen traffic disruptions. Now, it stemmed partly from cloud seeding operations. I once thought this was a myth, but I have learned that they're meant to encourage rainfall in the UAE. You had more than 40 flights cancelled, operations suspended for 25 minutes at Dubai International Airport, which might not sound like long, but of course, remember, this is one of the busiest hubs in the world. Dubai's media office has dubbed the downpours the rains of goodness. I'll let you be the judge of that. Stay safe out there, people. It looks a little bit sunnier this morning. But still ahead, you've got traders looking ahead to the Bitcoin halving event later this week. Grayscale shares their outlook for crypto markets later in the hour. That's Michael Sonnenschein joining us. Also ahead, Jamie Dimon tells us why JP Morgan's going all in on artificial intelligence. We'll bring you our exclusive conversation next. But first, BlackRock on the hunt for growth in Saudi Arabia as the kingdom ploughs billions of dollars into infrastructure and investments. Stay with us for that. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. If you're just joining us, it's 5:16 a.m. in London. I'm Lizzie Burden. Now, the world's largest asset management company is hunting for growth in Saudi Arabia's sovereign wealth boom. Bloomberg's learned from informed sources that BlackRock CEO Larry Fink has made it a priority to grow the business in the kingdom. Well, let's get more on today's Bloomberg Big Take with Matthew Martin, one of the authors who is in Riyadh for us. Matthew, good morning. I wonder how big a part of BlackRock's portfolio is Saudi, and how big would Larry Fink like it to be?
Good morning. Yeah, well, there's not a huge amount of disclosure that we get in terms of the size of BlackRock's business in Saudi Arabia. What we do know is that of the $10 trillion of assets under management that BlackRock has, but the Middle East and Africa as a whole is around $100 billion. So if you split that up across sort of the main markets of the UAE, Saudi Arabia, Kuwait, and Qatar, I mean, that suggests that you don't have a particularly large asset base here, considering that as well that, you know, we've got a sovereign fund in the Middle East, in Saudi Arabia, that's worth nearly $1 trillion. There's a central bank which also has around $500 billion of assets. You know, there's all of the family wealth that's here as well. So it suggests that there's a huge scope for growth for BlackRock in this market, which has been very underpenetrated by BlackRock and by other asset managers of its like.
And do you have the sense, to put it bluntly, that Larry Fink doesn't care about Saudi Arabia's human rights record, or that somehow he thinks he can influence it as a kind of Western statesman?
Yeah, I think that's probably exactly what he thinks. In the past, when following the murder of Jamal Khashoggi in 2018, Larry Fink cancelled an appearance in Saudi Arabia at the big flagship investment conference hosted here in Riyadh. But he was also one of the first global CEOs to come back to the country a few months later and appear on stage at an event promoting Saudi Arabia. And I think you can see as well from some of his public comments that he's made in the past that he does see, he talks about himself as a globalist, and as he thinks that engagement and working together and cooperation is how he's going to affect change here. That's obviously considered an optimistic view by some people. You know, the Saudi Arabia's human rights record has caused a lot of concern for some foreign investors. But given the scale of the change that has been going on here over the past few years, that's encouraged a lot of big global CEOs to put some of those concerns to one side, to try and come here in the hope of getting the cash from the Saudis. And also peddling this line that, you know, they think that engagement is the way to try and work with Saudi Arabia and improve some of these issues.
Better to be in the tent than out of it, I suppose. And what is it in particular that's caught Larry Fink's attention? Where's BlackRock putting its money?
Well, the big shift that we've really seen from Saudi Arabia over the past 6-7 years or so is that they've gone from having a very, very conservative, risk-averse approach to the way that they manage the sovereign wealth of the country that's thrown off from all of the oil income that the country generates, to under Crown Prince Mohammed bin Salman. They're now much more aggressive, they're much more in a risk-taking mode. And this, of course, is what's catching Larry Fink's attention as he wants to shift the BlackRock's business away from this sort of low-margin ETF-dominated to being much more about higher-margin private equity, infrastructure investments, and that's exactly what's happening here. We're seeing vast amounts of investment in domestic infrastructure within Saudi Arabia, but also the country has been going on this international private equity investing spree through the Public Investment Fund, and trying to get some chunk of that business is really what's attracting Larry Fink and BlackRock to Saudi Arabia and looking to bolster their business here and build relationships with the key government figures.
All right, Bloomberg's Matthew Martin on today's Big Take. We thank you. It's time for a break, so grab yourself a coffee. It's worth a read. It's on the terminal. This is Bloomberg. HSBC is said to have started a new round of job cuts at its Asia Investment Bank. Sources say the lender laid off around a dozen bankers on Tuesday. It comes as deal-making across Asia has slowed, especially in Hong Kong and China. Other banks, including UBS and Goldman Sachs, have made rounds of job cuts in Asia over the past 18 months. And to other banking news, JP Morgan CEO Jamie Dimon has been laying out his vision for the future of money in an AI world. Bloomberg Originals spoke exclusively with Dimon to kick off The Circuit with Emily Chang's second season. She asked him about the opportunities and the risks that lie ahead.
The best thing is be prepared for any business. When you think about risk, think about things that can go terribly wrong. Can you survive them? You know, it could be technology, it could be government regulations, it could be literally the weather. If you're a restaurant, you know, that might close you down. If if you lose this week's business, you're out of business, you don't have enough cash. So you should think all that through.
Bill Gates once said, banking is necessary, banks are not. To what extent could AI or fintech replace traditional banks?
So I think, first of all, I remember him saying banks are dinosaurs. I spoke to him about it in 1997, and he was dead wrong. He'd probably agree to that. But he's not wrong that technology changes everything. And if anyone is complacent or arrogant or think that because you have a big position today, you're going to have a big position tomorrow, that's a mistake. But then you have to define, what is banking? Someone's going to have to hold the money. Someone's going to have to move the money. Someone's going to have to raise the money. Someone's going to have to do research, around money. Those services will still be around. And, hopefully we're doing it and using a lot of tech to do a better job at it. But I've always thought it's very possible that some tech thing, disintermediates a piece of that. And I've been writing about, big tech going to our business. We got fintech, but we also have big tech. And they will embed payment systems in there. And some are going to white label banks, kind of what Apple did. They have the right to do that. I'm not against that. I would be against unfair use of their position to dominate us in a business.
Well, Apple is going deeper into financial services.
No
Do you
question.
worry about the Bank of Apple?
Well, we're going to compete. So they have a tough competitor, but they hold money, move money. Yeah, they're a form of a competitor. We also partner with them, but I'm very used to partnering and competing with lots of people.
Existential threat?
I don't think it's an existential threat, but I think if we were complacent about it, yes.
And you can watch that full episode of The Circuit with Emily Chang tonight at 11 p.m. London time on Bloomberg Television, or stream it on Bloomberg Originals. Now, of course, we did have comments from the chair of the Federal Reserve, Jerome Powell, yesterday. I just want to take a look at the impact on treasuries yesterday, because you did have the two-year yield briefly hitting 5%. It's flirting with that level currently. 4.98% is where we are at the moment. But this was Powell signalling that policymakers really aren't in a rush to cut interest rates, an acknowledgement of those three hot US inflation prints on the trot, beating expectations, and the impact that that's going to have on monetary policy in Washington. It knocked stocks yesterday. The S&P closed down 0.2%, but we've got futures pointing slightly higher this morning, both stateside and here in Europe. Euro Stoxx 50 futures are higher 0.5%. S&P E-minis and Nasdaq futures both up 0.25% this morning. We've still got plenty more ahead on the programme, so do stay with us. This is Bloomberg. This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Stocks and treasuries level off after a slide triggered by hawkish comments from Fed Chair Powell. He signalled that the wait for a rate cut could get longer. The US prepares to impose new sanctions on Iran, targeting its missile and drone programme. That after the weekend attack on Israel. Plus, we hear from the Finance Minister of Zambia as it tries to conclude debt restructuring talks. Well, it's just gone 8:30 a.m. across the Emirates, 5:30 a.m. in London. I'm Lizzie Burden, joining you as the weather is absolutely shocking over in the United Arab Emirates. You even saw a closure at the airport for 25 minutes. But let's get into what's happening on the markets. You've got futures pointing to a higher opening on both sides of the pond this morning, but you did have a lower close yesterday for the S&P after those remarks from the Fed Chair Jerome Powell, acknowledging that the path for rate cuts has got more difficult because of those three hot US CPI prints on the trot. So acknowledging the difficulty in bringing inflation down. You saw an impact on treasuries. So if we flip over to the cross-asset impact, you can see it. They're trading in a narrow range now, but they did climb to fresh 2024 highs yesterday. The market now pricing in 25 to 50 basis point reductions in the Fed rate this year, starting in July or September. But the dollar edging lower now after being on an absolute tear in recent days. Its best 5-day gain since October 2022. And if we just take a step away from central banks for a moment, you've got Brent crude there, $89.50 a barrel currently. This is on the geopolitics in the Middle East. Traders waiting for Israel's response to Iran's attack over the weekend. But remember, there is a strong tradition of price prices peaking in April or early May. So the longer time passes, you might say, the riskier it gets to be long oil. Just finally, a check on Bitcoin, because we're going to discuss it in just a moment. 63,888 is where we're trading currently as we get towards the Bitcoin halving. Is that halving going to be a tailwind for prices, or have we seen the best of the Bitcoin rally this year? We shall discuss in just a moment with the Grayscale CEO, Michael Sonnenschein. But first, let's check in on how Asia markets are faring. Avril Hong is in Singapore for us. Avril, what's happening?
Yeah, Lizzie, we're seeing a gauge of stocks catching a bit of a breather after multiple sessions of losses. And this was prompted, of course, last week by that U.S. inflation print. And despite those hawkish remarks from Powell today, saying that, there's a lack of progress on the inflation front, the idea here, I think, is that that's not materially different from what we heard last week. So Asia stocks are seeing that reprieve today, but not quite erasing the declines from earlier on in the week. And at one point, it did look like it was about to erase the gains for the year. But let's flip the board, because I want to show you what is helping to offset the declines in other parts of the region, such as Japan, is the CSI 300 and Chinese stocks. And this is after securities regulators in China sought to allay some of the concerns about the delisting of companies with weak financial health. That prompted a rout earlier in the week. So today we're seeing the small cap gauge of stocks rallying. Lizzie.
All right, Avril Hong in Singapore, we thank you for that update on Asia markets. But let's get back to Bitcoin now, because the bulls say the crypto token could hit $70,000 before the so-called halving event takes place later this week. One of the most important and innovative features of Bitcoin that occurs every 4 years, it cuts the amount of the new token issued in half. And my next guest provides investors the opportunity to passively invest in the crypto via ETFs, exchange-traded funds. That guest is Michael Sonnenschein, the CEO of crypto platform Grayscale, who I'm delighted to welcome to the programme. Michael, we look towards this Bitcoin halving. Maybe it'll happen on Friday. We know it's imminent. Usually it's a tailwind for prices, but are you expecting that this time? Have we already hit the rally, the peak of the rally for Bitcoin for 2024?
Well, it's great to be here. Thank you so much for having me. I think for a lot of investors, especially this Bitcoin halving, it's a little bit different this time around. And I really say that because I think it's really a function of who and how many investors are involved in the crypto ecosystem as compared to other halvings. So for a lot of investors, this has been a really important milestone for them to really revisit the fundamentals of Bitcoin. The fact that the overall cap of the Bitcoin token supply issuance will only reach 21 million tokens. On average, new Bitcoin are mined about every 10 minutes, so new Bitcoin coming into circulation. And about every 4 years, that supply gets cut in half. So Bitcoin today, there's about 19 plus million tokens in circulation. It'll take about the next 120 years for the remaining, 2 or so million Bitcoins to come online. And every time we come up to one of these halving events, it really does come back to the fundamentals of supply and demand. If demand for this asset is continuing to increase, but the supply is slowing down, historically, that has been a tailwind for Bitcoin prices. So we're just a couple of days away from this next Bitcoin halving. So I think a lot of investors are egerly anticipating to see what the market reaction will be.
Yeah, and you can see on the screen historically what's happened to Bitcoin's price as you've seen the halving previously. But as we approach this halving, Michael, are you spending more on marketing?
Well, I think certainly it's been a really great opportunity to educate investors. At Grayscale, having been around for the last decade, we've been through, several Bitcoin halvings. We've been through all different types of market cycles. And, now that some of the world's largest, asset managers, some of the world's largest and most influential investors are now eagerly and publicly involved in the crypto space, it really has shifted the dynamics and the narratives around crypto. And so as an organization, we certainly lead with an education first mentality. And that does include, marketing to new investors, new audiences. I'm joining you today from Dubai, where we're meeting with, new investors, making new friends, and ultimately learning about just how much progress has been made around crypto assets here in the Middle East.
Well, in that education, as you put it, are you targeting a particular demographic? And I'm thinking of any particular age ranges.
Well, I think that's one of the most exciting features about Bitcoin, particularly in this type of climate where there's, not a full sense of assurances about, in the U.S., for example, when rate cuts may take place, what economic growth may look like in the U.S. and other markets as well. Bitcoin and other crypto assets may mean things to different types of investors. So whether they look at it as a store of value, as a means to, make payments or move value around the world, or even just as a new technology investment. And so I do think that it does hit across multiple demographics and investors of different sizes.
OK, and you've got demand for the US Bitcoin ETFs markedly moderating in recent days. Do you think that that pattern's going to continue?
Well, I think when I zoom out and I look at the last few months, spot Bitcoin ETFs in the US were only introduced at the very, very beginning of the year. And so in the crypto world, what is about 3.5 months is in the real world about a full year of time. So it feels like they've been around for quite some time, but it's actually still a very new market. When we think about who is involved in Bitcoin ETFs today, it's still a relatively small audience. And so I think we're just at the end of that first phase of adoption before we start to see Bitcoin ETFs being adopted into model portfolios, making their way onto wealth management platforms, and ultimately being made available to a wider audience of investors.
And to reach that audience, what are you offering to compete with your rivals? When do you expect your fees to come down? Because if I'm right, they're some of the highest.
Yeah, well, so the Grayscale Bitcoin Trust, ticker GBTC, is the world's largest Bitcoin ETF, and we've been around since 2013. When I look at how the product has matured over time, for many investors, it's been a fantastic investment. It's returned over 49,000% since inception, making it the best performing publicly traded investment product. But our focus on Grayscale, isn't just stopping with GBTC. It's about continuing to expand our product family. We recently filed for the introduction of another spot Bitcoin ETF, the Grayscale Bitcoin Mini Trust. So pending regulatory approvals, we'll be able to have multiple products in market to allow really investors to meet them where they are in their crypto journey, and ultimately have different products for different investors with different strategies.
So, Michael, if you won't tell me when the fees are coming down, what else do you plan to do to stem the outflows?
Well, we're continuing to focus on our investor base. A lot of them are not only looking at Bitcoin or having kind of that core allocation, but they're also looking to diversify across the asset class. We recently introduced a new framework for investors, the Grayscale crypto sectors, that really are allowing investors to take a more holistic view of the asset class and understand differentiation amongst crypto assets, different use cases, different addressable markets. And so we're seeing a proclivity amongst them to want to not only hold on to assets like GBTC, but also move into other crypto assets that Grayscale offers.
Just in terms of regulation, do you expect the SEC to approve options on spot Bitcoin ETFs? And if so, when?
I really appreciate this question, Lizzie, because this is a really important topic. The SEC approved Bitcoin futures ETFs, and I believe it was only a day later that options were made available on Bitcoin futures ETFs. It took a couple years later before the SEC ultimately approved spot Bitcoin ETFs, and even though they've been in market now for 3.5 months, we still do not have listed options on spot Bitcoin ETFs. This is a really important feature that investors want and they deserve. This can help investors to manage their positions, manage risk. Ultimately, I do believe that the SEC should be approving these so that they're once again not in a position to be treating spot Bitcoin ETFs disparately from Bitcoin futures-based ETFs.
OK, Michael Sonnenschein, CEO of Grayscale. Lovely to have you. I hope that you don't get stuck in those floods while you're in Dubai. But thank you for joining me anyway. Great to talk Bitcoin ahead of the halving. And now to another exclusive interview. Zambia needs about $900 million this year to deal with its worst drought on record in parts of the country. The finance minister spoke to us about that and the progress in debt talks.
the biggest development challenge in Africa is to fight poverty. Debt relief gives you the relief, a starting point, gives you a renewal. But of course, the real poverty reduction comes when more investment is done, jobs are created, we reduce or eliminate the need for the African young people to trek across the Sahara Desert on the Mediterranean Sea, looking for jobs in Italy, Greece, and so forth. The jobs must be created in Africa. Let's fight poverty. So the debt restructuring gives a government the opportunity to be able to consolidate a relationship with investors, attract investments, the raw materials that we have, and get those to be worked on. So we should not lose sight that there's big business to be done after debt restructuring.
Given Zambia's experience and having started the process in February 2021 under the Common Framework, do you have any regrets of having chosen to follow that process and not go to try a different way of doing things, going to each creditor bilaterally, for example?
No, we have no regret on that. You see, the trouble is if you owe different organizations and entities, different backgrounds, throughout this process, there's always been the suspicion that we may agree to terms that may be favorable to certain creditors at the expense of the others. So the whole thing about common framework is how can we, the creditors, the ones that are owed money, provide relief in such a way that we share the burden comparably, or roughly equally, if you may want to say that. So we owed governments, we owed private creditors in the bond markets, commercial banks. If we were to do bilateral agreements, how would you be able to convince the other creditors that you have not run into the corner, made a favorable agreement with this particular creditor at their expense? So for us, I think this was what we thought was most practical. Yeah.
All right. Moving on to the drought that Zambia is currently suffering. It seems almost tragic. Just as you're coming out of one debt restructuring crisis, you're hit with another climate crisis almost immediately, with parts of the country having received the lowest amount of rainfall this February in more than 100 years of records. Perhaps you could talk us through a bit about the impact that this will have on Zambia's food security this year and into next year.
Mm-hmm. Yes, indeed, the drought that we've just suffered, 68 years old this year, and I've never seen anything like this before. Ordinarily, Zambia, year after year, we are self-sufficient in food. Our staple is maize. This year, the loss in agriculture output, specifically maize, is roughly about 2/3. So the harvest this year will be about just 1/3 of what we had last year. So priority number one under those circumstances is to prevent people dying out of hunger. That is priority number one, and supersedes anything else. Secondly, we have to see what we do to bring relief to farmers. Because the next agricultural season may be no more rain season. But if the farmers have been wiped out because of the drought, the money they borrowed from the banks are saying, pay us, you may have a good rain season and still starve because there are no farmers to farm.
Zambian Finance Minister Musa Katwani there speaking to Bloomberg TV in DC as the IMF spring meeting kicks off. We'll have plenty more ahead. We'll get into the geopolitics next. This is Bloomberg Middle East and Africa. Now let's return to the crisis in the Middle East. Iran's conflict with Israel and the prospect of escalating hostilities is also threatening to embroil Jordan. The Western ally is seen by many Gulf states as pivotal to their own security, and we can get analysis now from Bloomberg's Saudi Arabia reporter Sam Dagher. Sam, just how stable is Jordan right now, and can it continue this balancing act between Iran and Israel?
Good morning. Well, I mean, definitely Jordan is on edge. I mean, this is a country of 11 million sandwiched between Iraq, Syria, Saudi Arabia, Israel, and Palestinian territory of the West Bank. And since October, 7th, they've been warning repeatedly, like, look, the longer this drags on, the more this is going to affect our own national security. I mean, this is the Jordanian speaking, and security and stability in the entire region. I mean, they feel they're kind of caught between an Israeli government that they've openly described as a threat to regional peace and stability, and between that and Iran and its proxies, who they feel are determined to exploit the war in Gaza to expand their influence and reach throughout the region, including in Jordan itself. So, I mean, in addition to those dramatic missiles and drones that flew over Jordan, over the weekend. Most of them were over Jordan, and the Jordanians said they had no choice but to shoot some of them down, because they were, a threat to their territory. You've also have these protests outside the Israeli embassy in Amman. I mean, they've been going on for months, and they've recently turned a lot more militant and pro-Hamas. And just a couple of weeks ago, when Israel struck the Iranian consulate in Syria, you had an Iraqi militia leader that's backed by Iran threatening to flood Jordan with weapons. I mean, he said we have enough weapons to arm 12,000 Jordanians that would march on Israel. I mean, this was enough to trigger a telephone call from the Crown Prince of Saudi Arabia, Mohammed bin Salman, to his Jordanian counterpart, King Abdullah II. I mean, for Saudi Arabia and also the United Arab Emirates, I mean, this is really serious business. They have tribal and familial links to Jordan. It's part of their, I would say, strategic depth. So it's pivotal to their own national security. I mean, Mohammed bin Salman's signature project, NEOM, in Saudi Arabia, $500 billion to build a whole city in northwest Saudi Arabia. It's right there at the Jordanian border. So you can imagine how nervous they are. And also, from the point of view of the UAE and Saudi Arabia, Jordan is really the last obstacle for full Iranian control of the Levant. I mean, Iranian control through its own proxies. We're talking about Hezbollah in Lebanon. We're talking about the militias in Iraq. We're talking about the Syrian regime, where Iran, is very much involved, and right there in Syria. So they feel, and some of the groups inside the Palestinian territories. So the Gulf countries feel that Jordan is really the last obstacle. And they're also are very worried about political Islam. A lot of these protests in Jordan lately were dominated by very Islamist slogans reminiscent of the Arab Spring, which toppled a lot of the leaders that were allied to Saudi Arabia and the United States.
Sam, we're going to have to leave it there, but it's absolutely crucial context. We thank you, as always, Bloomberg Saudi Arabia reporter Sam Dagher in Dubai. We've got plenty more still ahead, so stay with us. This is Bloomberg Middle East. Microsoft is investing $1.5 billion into the UAE's top artificial intelligence firm, G42. For more, let's bring in Bloomberg's Abir Abu Omar in Dubai. Abir, how has Washington wangled this one?
Hey, Lizzie, good morning. So just a little details about this deal. Microsoft is investing $1.5 billion in G42, like you mentioned. Part of this deal includes Brad Smith, who is Microsoft's president, to sit on the board of G42. Microsoft will also will acquire a minority stake in G42. We don't know the valuation of that. But I guess the most interesting bit is how they came to terms of this deal. We have a little Bloomberg scoop from yesterday that showed that these talks actually had a heavy government involvement. We know that G42 has been involved with the U.S. government over the past year to kind of secure this deal. And we know that G42 has been asked by the U.S. to divest away from China and into U.S. technology. So for now, it looks like, the U.S. is winning this AI fight between them and China.
Okay, really interesting scooplet there. Bloomberg's Abu Omar. We thank you for bringing it to us. And we have to look out, of course, for a bit of blowback from Beijing on that. But we are looking at US futures pointing to a slightly higher opening this morning as we get towards the open. Tom McKenzie will be with you for Daybreak Europe next to take you through Powell's remarks that weighed on stocks yesterday. He's coming up next. So stay with us. This is Bloomberg.